Welcome to Mark Arnold's Finance. Are you feeling FOMO right now, fear of missing out? Of course, the stock market is rallying up again, and that's because there are some positive GDP growth numbers that came out. But I say not so fast. I think there's some warning signs that we should know about as investors and prepare for a possible volatile year. So I want to cover all of this and where I think investors are getting it wrong right now. The recession fears have lowered massively. Investors are now expecting that soft landing or a very mild recession. Investors are pricing in that the Fed might start cutting rates by the end of the year, but I think that's a long shot and unlikely. And of course, again, the GDP numbers came out higher than expected, and it's creating this positive kind of effect in the stock market. But I found some flaws and cracks in the higher than expected reported GDP growth, and I want to share why I think we still have a high chance of a recession and the one main thing you can do to protect your portfolio from large losses should a recession hit. Plus a few more tips and my plan for my own portfolio to protect it from those mass losses that could be seen if a recession hits. Now, of course, I want to show you my portfolio performance. I share this with every single video. This channel is all about transparency. And for a long time, this portfolio has been in the red and it's finally flipped over to the green for the first time in a long time. And I want to contribute that mainly to Microsoft. This, of course, is my largest holding. It makes up now almost 19% of my portfolio and it's up 4.12%. Where just recently was in the red or flirting below that 1% in the green. Of course, the whole market is going up, so everything kind of lifted up like a tide, but I'm in the green officially by 0.79%, or that's $379 in unrealized profits. So this is great to see. It's rare that this has happened in the last year and a half, but I think we're still in for some trouble. So let's start with the GDP report and why I see it as flawed and why I think investors may be getting it wrong with this rally and why I feel we are headed straight for a recession. So you'll see here this chart of the GDP growth or decline, and right now the very last bar on the right shows that GDP was just announced and came in at 2.9% growth. Now, the main thing that is boosting this increase in GDP was government spending. Big surprise, right? Like the government ever spends responsibly or appropriately. That's not their thing, so that's not a big surprise. I also don't think investors are looking at the full picture. Companies increased their inventories in fourth quarter, and now they hold high inventories, which means less corporate and business spending in 2023, and also less profits to be made as they're going to be trying to sell those items at discounts, which signals a slowdown in that area. Now, 3M just reported earnings, and one of their big forecast warnings themselves was that a lot of the companies they do business with have high inventories of their products, and they don't expect them to buy as much in 2023, which will hurt their earnings, their revenue, their profits. And I think that's going to happen for a majority of the companies out there in the stock market. We will see here from this article that the government increase in spending added 0.64 percentage points to the GDP, and the inventory increases added 1.5% points to that GDP, which equals a total of 2.14%. Now keep in mind, we had 2.9% that just came in. So if you take out these two factors, the GDP would have grown by only 0.76%. And so I expect these to slow significantly in 2023, and especially on the inventory side of things. But there's other things that lead me to believe we are headed for a recession. One being that we see companies are laying off. Last year it was big tech, now it's spreading out everywhere else, as well as prices across the board remain elevated. Eggs, anyone? So that means less consumer spending this year, and I think there's going to be a massive pullback of that. Also, the housing market is declining quickly. And to me, the fourth quarter earnings still had the strength of the year-end spending for the holidays and travel, and so that's still baked into those numbers. But in Q1 and Q2 of 2023, I feel it will be rough with earnings and present the two declines in GDP, consecutive GDP quarters, which would mean a recession. Now, last year we had 2 quarters of declining GDP, but of course they said due to the strong labor market, they were not considering it an official recession. But of course that's going to be hard to argue with all these layoffs, and I really think that is what's going to equal this time. They cannot fight back in any way and say it's not a recession. It's going to be a recession this time. And with those layoffs, it does take time for that to hit the spending and everything else. So why should you care about all this? Well, first off, despite this rally from the earnings that we've been seeing, which have been mixed, and the GDP growth, once earnings take a possible bigger hit in quarter one and quarter two, and GDP possibly goes negative like I am predicting, of course the Fed could pull off that perfect landing, but if not, the fear will creep back into the markets and we will see some buying opportunities present themselves for us investors. So part of my plan is to have some cash on the side and take advantage of those opportunities this year. So as investors, we need to look for that buying opportunity and not fall for the panic or sell or make emotional impulsive decisions. That's what happens when the stock market declines. And it's funny because most of us know better, but it seems like every time I hear people selling out of quality investments, letting the fear creep in, making impulsive decisions that lead to lots of losses in their portfolio, you need to factor that stuff out of your mind and keep on a quality long-term mindset. So the second thing I want to mention is how to protect yourself from large losses during a recession, which you want to make sure you focus on companies that are low leveraged, companies that have low debt. Now, leverage spiked up, but not interest cover after the financial crisis. Interest cover, which is paying too much interest, is not why companies default or go out of business, though it may help tilt it towards that way. It's the high leverage companies, those with high debt, that will default or not be able to refinance and go out of business. So you also want to look for in your investments, in your companies that have credit quality and earnings quality. Those are extremely important, as well as that low leverage company to not only survive, but even possibly thrive during a recession. Yes, that is possible. I look at Microsoft. This is my largest holding. I just stated it. It's 19% of my portfolio. And to me, this company is one that I'm happy going into a recession because it's low leveraged, it has high earnings quality, and is only one of two companies with a higher credit rating than the US government. So Microsoft can take the hit of a recession, and if needed, it will have no problem taking on more debt if necessary to be able to survive and thrive during a recession. So that's an example of a company that you want to hold in your portfolio and why I hold it in mine. Not only is it going to help during a recession, but in non-recession times, it's going to offer excellent growth. So again, I am keeping some cash on the side for when the fear factor rises, as I do feel we are headed for a recession, and I am focusing on companies that are low leveraged, have high quality earnings, and that have high credit quality. Of course, amongst other things, but as far as surviving and thriving in a recession, these are what I feel are most important to protect your investments from large losses or worse, one of your companies going out of business. If you are interested though, and have not seen this, I put it in prior videos and made a full dedicated video to it, so you want to be sure to check that out. I also focus on my quality checklist to help pick high quality stocks that I feel will provide excellent growth for me. And here's the list. These are the things I look at. Solid financials. And of course, if I do a video and focus on this, you will see exactly what I look for. I look for a good management team. I look for that brand recognition. I look at the products and services and how strong they are. I look at the moat of a company, and also, of course, you need to factor in the valuation. Make sure you're not overpaying. And this is the quality checklist that I stick to when buying companies, because I feel this will help me fill my portfolio with high quality companies that will provide me lots of growth in the future and help me to become wealthy. Now, of course, no one can predict the future, and maybe we will have a wonderful year in the stock market. Maybe the Fed pulls off the soft landing, but for me, I am preparing for a recession and those buying opportunities when the fear index is high. I took a step back and analyzed things, and due to everything I mentioned, I do think we will see a recession and some big drops in the market this year. So this is how I am preparing. Now, if things go well, let's say the geopolitical issues happening between Russia and Ukraine end, and we see maybe over the next couple Fed meetings that they signal rate cuts by the end of the year, then I will quickly deploy my cash that I have sitting on the sidelines, because from there we should probably only see growth in the stock market, and I want to get in early before it really takes off. If not, I have a few companies I'm watching to jump into should I get a great buying opportunity this year. And that is what my next video will be on, is these stocks that I plan on buying. So you want to be sure to subscribe so you don't miss that content, because it's really going to help provide you with some different ideas, some different stocks. And this channel is all about learning and growing, and we're all presenting and learning together to become wealthy. So let me know if you think that a recession will hit or not this year. Do you feel I am preparing in a responsible and smart way to protect my portfolio from losses? And how are you preparing for a recession if you feel one will occur? I'd love to hear your feedback, and I appreciate you guys for watching. I feel this is very important to hear others' perspectives. I am one that I like to think of the big picture, and I think that's the best way to approach things. So I really do look forward to hearing any feedback from you guys, and if you agree with me or disagree, and that's how we learn. So until next time, we'll see you very soon on Mark Arnold's Finance. Have a great day.